Once more moderating the panel is Oscar Wendell, Senior Manager, Dubai World Trade Center Fintech Surge. It's over to you, Oscar. Thank you.
Thank you, Andrew. Welcome all. Thank you for joining us after lunch. So this is the fifth panel, and it's building from the previous panels that are looking at payments and the ecosystem. The title is Making the Best of a Changing Payments Landscape in the Middle East and Africa. And to reiterate how I opened the last panel, it's a challenging but exciting time to be in payments when everything is changing. The players, the regulations, the technology. The only thing that is guaranteed is that there will be competition, and it will be fierce. We will need to innovate, and we'll have to build alliances. So the message I'm hearing is that you want to revitalize the core so you can have open banking and traditional banks can benefit from the new services and technologies in all kinds of ways. But the flip side of that is that fintechs are, of course, reliant on having the traditional banks and a good core banking with all the costs that's been associated with acquiring those customers and keeping the hygiene of that information, and they're asked to share it. And then many fintechs, like the neobanks and the transfer companies, Revolut or Wise, so on and so forth, they pick the cherries of the most profitable, lucrative services and do nothing else. Especially, of course, the previous panel looking at cross-border payments. Well, I mean, it's pretty basic in economic theory that you build walls of entry. Barriers of entry to a market. I want to hear from the traditional banks. I mean, how are you viewing this? How are you making sure that it's not a Trojan horse when you open up to fintechs? Talking about innovation here and business models, fintechs, they've certainly contributed to most of the innovation that we've seen in the banking and finance space in the last, I mean, since COVID, it's been put on steroids. But who's making money? There are very few profitable fintechs. I just heard that Wise is one of the few, and they've made 20 million US dollars. That's not even a drop of water in the ocean. Meanwhile, the banks are making bigger profits than ever, and so are the cloud providers, the software solution providers. So maybe the fintechs are not the enemy. They're providing charity in the form of great ideas and investors.
Free innovation.
Yeah, investors taking the loss and improving the systems to make the incumbents more profitable than ever. I wanted to pick up on hyper-personalization. I'm sure, of course, every retailer wants that, to be able to target their products to the most apt potential client. I recently switched to an iPhone and noticed that I can choose to stop tracking, always not allow. I don't want hyper-personalization. The suggestions I get, I'm sure Google knows me better than I know myself, but then I don't want to know myself with what I'm getting recommended. And talking about CBDCs, that also allows for central banks to see and hyper-personalize whatever they want to personalize on all the info that they can see on every purchase you make. When you see the future of technologies with both privacy and security and the technologies of, you see everything, whether it is, the large corporates or the fintechs or global government. I mean, there are some challenges in implementing blockchain, and one of them being the computing power that's required with all the data to be processed. I mean, IBM, correct me if I'm wrong, they shut down their blockchain practice. They have Trade Lens that I understand has not really been the success that it was anticipated to be. How do you see yourselves with trade finance? It's a very good use case for blockchain, but what are the critical factors to having it efficient? I mean, everything with banking has to be efficient, cost efficient. in many cases, blockchain just adds a layer, pun intended. So, I mean, trade finance and it's the perfect use case because there's so many stakeholders and transparency and sharing of information is required. So distributed ledger makes a lot of sense that can be verified. When it comes to banking, particularly Swiss banking, a lot of it is not about distributing information and keeping it very centralized. What are the benefits from a banking perspective? So I'm picking up on some of the things you're saying here with wallets. The retailers or the owner of the wallet, they own the merchant data, they own the transaction itself, they own the money. They're taking over. I want to hear from you, Sampath, on the ownership of the credit risk. How do you see BNPL and the opportunities and threats with new players coming in and taking on consumer credit? We're seeing a lot globally in a very saturated market in the Middle East overall, but few are profitable, and you certainly still are. What's the secret? You mentioned speed, and why is ISO 20022 required that the current SWIFT system doesn't already have? As I understand, there's going to be a lot more information in the new standard, and it's going to require a lot more data processing on all levels. And as I've been hearing is that, especially with large volume transactions, will the banks be able to handle the stress? It's been another fantastic conference by MEA-Finance. I want to thank you, Andrew, for allowing me to moderate. Thank you all.